All right, let's get right into it here. I know it's been quite a bit since I posted about a month ago. I think this is the first time since about a month ago. I took some break here on YouTube, but I've been active on Twitter or X and StockTwits. And so thank you for your follows and thank you for all the viewership. Going into 2024, I believe as far as long term is concerned for this entire year, I do believe that S&P and the rest of the equity market is we're going to have a good year this year. And that's what you're seeing this chart right here in S&P 500 index. Daily chart going all the way back to 2008 here, as you can see. I have 7 charts for you in this video. I'm going to go through all of them. And these are the most highest engagements that I've received just this past week on X. And these charts, I think, are very relevant. Not only going into this week, but going into possibly remainder of this month and for the month of February. So looking at this SPX here, first of all, we have to understand there are 2 things we have to understand. First of all, we have to understand the midterm, the short to midterm, and the long term. So looking at the short to midterm sense, going all the way back to 2009 lows here, right? That's a 2008 peak. That's 2009 lows. What happens after he makes new all-time highs, right? Since 2009 lows, what happened was market tends to, not always, but tends to continue higher. That primary term uptrend continues to, it resumes, right? It resumes and continues. So you can see that's what happened in 2000, looks like 13 or so, 14. We saw another year or so up move before the 2015 and 16 corrections, right? And then as you can see here, this is 2016 low, right? You make new all-time highs here, and then 2017 run, right? However, here in 2019 or late, this is 2018. 2018, late 2018, this is, I believe this is 2018, like February 31st. That's where it bottomed here. So you can see this was about 12% correction in early 2018, like January of 2018. We made a move. We consolidated for about 6 months here and then made new all-time highs and it fell back down. And that was about 20% correction. Very abrupt, sharp decline. The entire internet was freaking out. And then we V-shaped higher, right? And then we made new all-time highs here, as you can see right there. We made new all-time highs right here. We pulled back, but it got back up. Resumed with this primary term uptrend. Before we met with 2020 March COVID crash. Got back up, right? This was 2020, late 2020 here. This is the election month here, November of 2020. Made new all-time highs, as you can see right here. And then the market continued on. So going all the way back to 2009, we can see that there was only one time, which was late 2018, that it made new all-time highs and subsequently plunged back down 20%. Many other times, market continued with its primary term uptrend. However, 2019 new all-time high, it rallied, continued, I believe, only about 5 months or so because it was met with COVID decline, 2020 March. But in 2021, this is 2020 November, we continue for another year, the full year. And so that's a long-term sense, but looking at things in the midterm, like a short to midterm, when you can see every single time when you make new all-time highs, and we don't know when, because during 2013, 14, 2014 here, it continued on. Keep in mind, this is, we're looking at big picture here. So this looks like could potentially be like a month of upturn, even after new all-time highs and then before correcting down. So what we see is when we look at that red circles here, there's a short to midterm correction. There was a short to midterm correction there. Again, 2014 new all-time highs, and then it followed by that short to midterm correction, right? 2016 new all-time highs after 215 percenters. There was a short to midterm correction. 2018 made new all-time highs. This one plunged down 20%. 2019 new all-time highs. You can see right here, short to midterm correction. 2020 new all-time highs. Again, election month here in November. You can see like some fluctuations, some volatilities. I remember, I think that lasted about a month, and I believe that was about 12% correction. It was like 8% and then like 10% or something like that, like 8, 10%, 10, 12% correction before resuming. So looking at that, we can kind of gauge and say, well, possibly, because again, this market has gone up vertically since November, like November 1st, to be exact, like October 30th or 31st. And then it pretty much went vertical for 3 straight months, November, December, January. We're entering end of January here. It's been pretty much going straight up. And we just finally made new all-time highs just on Friday. So we could potentially, this could potentially continue, because if we observe here in 2014, looks like we continued higher. It looks like 2016, we continue higher for a little bit. Same thing here in 2018. 2019, it looks like we made new all-time highs. We went up a little bit, came back down. 2020, again, looks like it went up for another week or two before coming back down. So that this is the area, because every single time, going all the way to 2009, every time it made new all-time highs after steep correctional phase, it made sort of that, again, short to midterm corrections came about, and possibly to retest that. It looks like there's a retest that happened. Again, that's a retest of a all-time high level. Again, there's a retest there. This one was all around it, and this was also all around the all-time high level. So that's what we can sort of forecast, possibly starting February here. If we continue higher this week, and sometimes in early February, early to mid-February, we might see some volatility to kind of retest that, you know what I'm saying, that the all-time high level. Let's go to the next chart here. So this spider, 65-minute chart here. So 65-minute chart, obviously we're gauging micro-term trend of this market. So you can see this is where we got into the extreme overbought level here. So last 2 occasions, one, when that happened during, it looks like December of 2023, market continued on. And then it finally came back down, and you see, so even it hit extreme overbought, market continued to make a move to the upside. However, during like a late December here, I think this is like right here, hit the old extreme overbought, and it tanked for 2 hours, or the 2 hours right here, and then next day we gapped up. And then we kind of got back up before actual correction came. So that's what that was. So here, this chart was screened on Friday. We're kind of getting near to that extreme overbought here, as you can see. The way you reconcile this extreme overbought signal is that we want to give benefit of the doubt to the buyers that potentially it could do something like this, while at the same time understanding the fact that it is extremely overbought in the micro term, that the odds are catching up. Our job is not to predict what's going to happen tomorrow. Our job too is manage risk. So let's say you bought some, I don't know, some call options or something like that, and you're in this vicinity. When you see this signal, this is a time to start closing out some, maybe half, maybe 2/3. But then you want to have some remaining just in case this market potentially keep going higher. You want to take some off to lock in that gain just in case we plunge down next day. Next chart. So this is Russell 2000 daily chart. So this is a 3-day candle pattern. So that's the evening star pattern there, as you can see on Russell 2000. Right? We got the bullish candle there, and then it sort of pauses there with the doji, and then we got a couple other dojis here. But these dojis, it could mean nothing because it could have been bullish, it could have been bull flag. What really made it into bearish evening star was this down candle right here, the red candle breaking below this neckline, right? So same concept here. This is a morning star. So you can see there's a bearish candle, you got the bullish, and then it turns around. It looks like we're breaking out. It needs another bullish follow through for that confirmation of that 3-4 day of bullish morning star on Russell 2000. This is a QCOM. So I was tweeting that instead of chasing Nvidia, if you're not already in it, it's hard to go long now on Nvidia after it made what 500% or something like that since the October lows. There's something like QCOM that's been consolidating for about a year and a half or so here, made a nice base. We finally broke above the neckline here, came back down to retest, and now we're making its turn. This is all-time high level right here at about 190 or so. So we still got room to move, and you can see we have bullish cross on this daily oscillator. Next, this is Google, basically comparing to, so you only had two major buy signal for value investors, right? Value investors want to buy things in it when it goes on extreme clearance sale, which was somewhere in 2009 lows, which said odds that, again, this is a monthly chart. I'm looking at monthly oscillator here. The monthly oscillator hits the extreme overbought, and monthly oscillator hitting extreme oversold, it only happens in every decade or so. So you can see last time we saw that in 2009 and 2022. So 2022. So people are looking for, oh my gosh, man, if I just knew, if I could have just bought the 2009 lows on Google, man, I would have made us so much money, right? Well, you've had that chance in 2020 or 2022 because that monthly oscillator fully reset it just exactly where it was 2009 lows. So as you can see though, it's difficult to go long now unless you're already in it, because now we're hitting, because what happens is even after 2009, right, we bottom, we go up, and there's that pullback right there. So if you want to go long on Google, I'll probably wait for a pullback. And this is not a time to go long now unless you're already in it. Next, Intel, this is a quarterly overbought is even more rare because it comes every 2 decades or so. So last time it came about was 1985 or so, 2004, and then here 2020, late 2022 or 2023 here. So 1986 to 1985 signal, as you can see, it made quite a bit of move, right? That's, I mean, that must have been at least 1,000%. Again, this is a log scale, so that must have been about 1,000% gain or more, possibly. 2004 signal that pretty much moved sideways because Intel really based out there after 2000 .com crash. However, you have to understand, if you did buy after this signal here, the Intel didn't go like continue lower, you see, so you wouldn't have made any money in holding for the next decade or two, but at least you didn't lose any money. But here, I feel like, it hasn't gone anywhere. Intel hasn't gone anywhere in the last 20 years or so. And the secondary quarterly just crossed up. It's not overbought. We just turned off after oversold. We just made a little perk up here. I wonder it's going to be similar to that on Intel. Keep in mind, though, we made how many quarters? 1, 2, 3. We got like 4, 5, 6 quarters of upturn. You can see last time we had like 4 quarters upturn, and then we had like 3, 4 quarters of downturn before making a move. So just keep that in mind. Next, this is going to be the last chart here for you guys. Coin. So this is, first of all, we have to understand that this is very prominent level. This is very conspicuous level. Everyone can see this is the level that everybody's looking at. Why? Because this is, first of all, it's a very, very pretty looking chart. The prettier it is, the less likely it's going to play out, I think. But sometimes market wants to be generous. So we'll talk about this. And I'll give you guys a follow-up on this later on the Twitter or X account. But here, prior resistance, possible new support, very basic technical 101 there. Bearish shooting stars here. You can see long upper wicks, long upper wicks, long upper wicks, long upper wicks, telling us there's sellers there in that vicinity. So people are taking profits. There's short sellers there after this kind of upturn. Look at the huge green bar there. These wicks. These wicks are basically pretty much telling us there are sellers there. There's oversupply, and also this could also be evening star too, right? So there's a neckline right there. There could be evening star. It's grinding, selling there, and finally, it was not able to make new highs. Bottom fell out, and you can see we deteriorated, right? But that all happened after my oscillator hit overbought. So you look for that overbought, extreme overbought on the oscillator. You look for some of these candlestick patterns and certain levels, and then you sort of and then once that oscillator started rolling over, and you see how that trend is now reversing back down. So now here, right, we had a huge upturn coming back down. We're right in the middle of it, right? We caught this prior resistance. Now what we do have is bullish hammer. We got the long lower wick, small body at the top there, and we are oversold. We are getting into the extreme oversold. But however, we are not seeing that cross. We're not seeing that bullish cross. We're now at oversold, but we don't see a cross. So you sort of have to, for a confirmation, we need that cross. However, even with the cross, sometimes it could take time. Here, as you can see, bullish cross happened here, but it built base for several months before making that rally. But sometimes it builds base, sometimes it makes that V-shape higher. That we don't know. We don't know if it's going to build base here. We don't know. We're going to just V-shape higher here. But if this is high and higher high, and that's low, that's higher low, and this primary trend is going to continue, somewhere in this vicinity is a good level to really keep an eye on. Even if it doesn't bounce here, it might go up a little bit and come back down lower, Because if everybody's looking at this pivot as potentially that support market, like, see, because people went long here, they're gonna place stops around here. Markets sometimes like to come down, take your stop, and before making that run, could potentially do some sort of. What I'm saying is, I'm not proposing that this is the low, where it could be the low before we're going back to 180 or higher. But even if we break lower, that doesn't mean the entire thing is going to collapse. And I think this is the vicinity as we're heading into, or entered oversold zone. This is a vicinity. Possibly we could see some sort of a bottoming process here on coin.